everyone. Thank you so much for joining tonight. We would like to welcome you all to the first of 6 expert panel discussion on TADS sector and then TADS Awards 2021 information sections. We have another 5 sessions that show on the screen that you can also sign up for, covering other key topics in the TADS sectors, joined by estimated domain experts. Feel free to scan the QR code on the upper right top corner to register. And then if you have any questions, please do not hesitate to reach out. So now I would like to give you a quick rundown of today. Our chairman of steering committees of TADS Awards, founder and CEO of Constraint Partner, Samson Lee, will start off by giving us a 10 minutes information sections on TADS Awards 2021. Followed by that, we will have our expert panel discussions. So now, as I say, let's give a warm virtual welcome to Samson Lee, founder and CEO of Constraint Partners, and I'll pass you the time. Hi, Sam.
Thank you very much, Camilla. Hi, I'm Sam Lee, the founder and CEO of Constraint Partners. Today is a great pleasure for me to be here to share with you about TADS Awards 2021. So let me share my screen. Okay, can you see my screen okay?
Yes.
Yes.
All right, great. Okay, great. So as Camille mentioned, we're gonna have 6 expert panel discussion from now running until September. So in each session, we also will share a short information session introducing about TADS Awards. So this is the first session. Okay, for TADS Awards, it is the world's first annual international awards for tokenized asset and digitized security sector. It celebrates the industry by recognizing and honoring significant contribution and distinguished achievement worldwide. It brings together individuals and businesses to share the energy that tokenization brings to the financial sector. Last but not least, we also nurture the growth of this specific industry by joining established best practices and setting measuring standard for high quality tokenized asset and digitized securities together with other industry leaders on the global market. So this is what we set out to do when we launched TADS Awards for the first year, last year in 2020. So this is the second year of TADS Awards, 2021. So for this year, we follow the same high-level structure as last year, which mainly with the awards composed of 2 categories. So the first category, as you can see on the left, what we call the Best of Class TADS Awards. This category goes to the asset issuers. So from here, we have some subcategory for different type of digital assets. For example, in this year, we have equity-backed tokens, asset-backed tokens, tokenized debt tokens, which these 3 are the same as last year. Plus, we also adding a new element called NFT tokens. Some of you might notice recently there's a lot of momentum about NFT tokens. We believe in the NFT tokens, some of them, particularly those have involved in highly, like what we call the investment grade kind of asset backing the NFT token. Some of them contain fractionalization features, even like a return on investment, and those might consider as security tokens as well, right? But not, I will have to say, not all NFT is securities, right? But some of them might be. So we are more focused on those NFT with securities features. And of course, continue from last year, we also continue to have the ESG and SDG token subcategory. On the right-hand side, the other category we have is what we call ecosystem excellency. So this award category is aiming for different service provider and technology providers along the value chain, including different vertical solutions, such as KYC compliance solution, token issuance, digital custodian, and same logic as the NFT token. We also have a new award for NFT platform, and also brokerage asset management. And in the very bottom, you will see from both categories in this year, we also add a Rising Star Award to reward those up and coming projects who will be the future star. For the judging criteria, as you can imagine, the best of class TADS award category and ecosystem award category are very different, right? They are aiming for different group of potential winners, and also so that's why behind on the judging criteria is also quite different as well, right? For example, for the best of class TADS, it aims to evaluate different type of tokenized asset and digitized securities. So we will do the judging based on the 5 criteria, such as economic viability, innovation, risk management, governance, and compliance, right? So these are the 5 criteria we use to judge this new type of financial products. On the other hand, for the ecosystem excellency, this award aiming to goes to different vertical solution or service provider. So the judging criteria that we use are ingenuity, impact, practicality, compliance, and cost efficiency. As you can see, with only the compliance as the only common element, the other 4 are quite different, right? But of course, like, because we are talking about tokenized asset and digitalized securities in a fully compliant environment, so this element is just as important for both categories. We will be running a year-end grand awards in Hong Kong this year. So the nomination already started. It will run until September 30th. So there's still a good month and a half from now. We already received some many good nominations already, but we welcome for more. So please feel free to submit your application online. You will find all the details. And just one note, this is a very transparent rules that we offer to everybody because the award is by nomination. So feel free, if you can find any of our partners you can find online, or any of our committees or ambassador individuals you can find on our website, if you can have them to be your nominator to nominate your project will have 5% bonus points. So we consider this as an added layer of due diligence. So feel free to reach out to all companies and individuals you can find in our website for them to be your nominator. For the award ceremony, we aim to have it in early November. It will be a side event of the Hong Kong FinTech Week. So whether it will be a physical face-to-face award ceremony, which we love to be, but it very much depends on the situation of the pandemic and COVID, right? If situation allow, we love to have a face-to-face event. If not, we will probably have a hybrid event, just like we had last year. We'll be hosting award ceremony on a physical location with a stage, with award presenter going on stage and announce the winner. But in that case, won't be able to have any audience on site, and it will broadcast the event online globally as a backup, right? this is the steering committee from this year. Many of them have already supported us from last year. Thank you very much. As you can see, they are coming from very diverse background and also from different geographic regions. TADS Awards is an international awards, so definitely we want to bring in the best community internationally. This is the organization committee. And our award and vetting committee for the best of class TADS category. Our awards and vetting committee for the ecosystem excellency category. And of course, like without the strong support from many strategic partners in terms of their insight of the industry, the resource, the network, we won't be able to make our TADS Awards successfully. So really appreciate for the support of all the strategic partners and also other supporting organizations as well. And our sponsors and research partners. This year we have a new partner category called the Regulated Exchange Partners. These are some of the regulated exchange that we already announced the partnership. There are more to come in the pipeline that we will be making an announcement very soon. One point that to note here is that because many jurisdictions, they started, the regulators started the sandbox program back in around 2018, 2019, something like that, right? And until now, we see this year particularly, many candidates from those sandbox program are graduating one by one. So we see accelerated way to see regulated exchange coming on live from different jurisdiction and markets. So this really complete the whole ecosystem end to end. I think it will be very exciting to see how things develop in the second half of 2021. And also thank you for the great support for our media partners globally as well. So this is my last slide. It's about the overall timeline. As you can see, we're here on the information session. Actually, there's this point is not totally updated. Originally, we were thinking about free expert discussion panels / information sessions with a very strong support from our community and ecosystem partners and strategic partners. We are now hosting 6 sessions, as Camille mentioned in the beginning. And we are running the first session now. And moving forward, nomination will be closing September 30th. Our committee will get together to come up with a short list of finalists in the first week of October. And then the judging committee will start making the judging in mid of October. And we are targeting to have our awards results by the end of October. And therefore, we'll be able to make an announcement and an award ceremony in early November. So this is the overall timeline. I think that's all from me for today. Thank you very much for your time. Okay, Camille.
Sure. Yeah. Thank you, Sam. And
Thank
then
you.
now I would like to introduce our moderator from the panel discussion today. Our moderator, Christine Solison, Deputy Editor of the Tokenizer, and then panelists, Chris Carlin, Head of Alliance with the Distributions of Solutions and Data Products from Asia Morningstar, Litin Gorn, Director, IBM Financial Sciences and Digital Assets of IBM, Eva Law, Chairman of Association of Family Office in Asia, and Samson Lee, co-founder and CEO of Constrict Partners. Now I pass the time to you, Christian.
Well, thank you so much, Camille, and thank you, Sam, for the introduction to the current status of the TADS Awards, and congratulations on now bringing this into its second year. It's lovely to see such a catalyst for the industry, an industry I think speak on everybody's behalf here that we all wholeheartedly believe in. But on to the lovely panel that we have today, and thank you those of you that have chosen to join us here live, and also thank you to you who choose to watch this at a later point in time. As Camille mentioned, my name is Christian Sorensen. I'm the co-founder and deputy editor of the Tokenizer, which is the leading news and data platform for the asset token industry, and we are a proud partner of the TADS Awards. So without further ado, I would like to introduce our panelists, or rather I would let the panelists introduce themselves. Without further ado, I would very much like Eva to take the lead and say a few words about yourself and the role that you play in the digital asset industry. And we need you to unmute, Eva.
Oh, yes. Thank you, Chris. Yeah, hello, everyone. It's Eva. I'm the founder of Association of Family Office in Asia. I think I'm not the expert of asset tokenization, but we do support, player that in the ESG related token. And also we recently have a project which we want to use blockchain for philanthropy purpose. And in this project, we are exploring using stablecoin for making the treasury option when we receive the donation money. And we would like to, in the future, maybe receive other token assets for a donation. So this is the area that how we in the industry, that myself is not the expert in tokenization industry. Yeah. More I would say I'm more from the entrepreneurial or family office side. So they always looking for funding solution. Then that would be the area that we are interested in tokenization.
Thank you so much, Eva, and I'm sure you will have plenty to contribute. This is not meant as a technical session, but as an infrastructure and an industry session where we will discuss the potential of these technologies and these new services. So handing over to you, Nitin, can you please say a few words about yourself? And I think people may have heard of the company that you work for, but in any case, about your involvement in digital assets.
Thank you for your kind words, Christian. So really glad to be here again. And this becomes an annual event now for us with TADS. So congratulations, Sam, for such a great event and bringing the focus back to what I would jokingly term as Emmy of token assets and tokenized assets. So my name is Nitin, and I serve as Director of Financial Sciences and Digital Assets. I founded Blockchain Labs in 2012. So this is early days of blockchain. And then I founded Digital Asset Labs in 2017. And the intent was to be able to understand the underlying technology, which is blockchain, and application of that technology, and both in terms of transformation to financial services industry, but also in terms of the disruptive powers of what we begin to see now with the whole trend with stablecoins, central bank digital currencies, NFTs, and tokenized securities. So certainly been a very interesting journey. It's never a dull moment, and I've been on Wire since 2012, and it's just, I'd say the party has just begun. So looking forward to an amazing conversation.
Thanks, Nitin. And handing over to you, Chris, you also represent another angle into this ecosystem.
Indeed. So thank you, Christian. Chris Carlin, and again, glad to be back this year. With Morningstar for about 5 years, focusing on data products across the Asia region. Probably about 18 months ago, I was introduced to some digital asset players in the region and Europe. I got to explore the industry a little bit more and found out that Morningstar was kind of a side participant in this business by rating a token, but it was the first time a token was rated. And so that's brought a lot of attention to Morningstar, and I hope to keep carrying that momentum for the company, certainly in my region, but also as a champion within the company globally.
Excellent, thank you. And Sam, while we have heard from you already, you have anything to add to the introduction of yourself and your role in this industry? Also, unmuting would help.
Yeah, sorry. Yes, my pleasure. Thank you, Christian. Yes, I'm Sam Lee, the founder and CEO of Constreet Partners. Constreet Partners we found in 2017, and early adopter of security tokens. Back in the days, is still at the start. Is we a lot of is pretty early and lacking of a very clear regulatory framework. But we actually think the crash that we see back in 2017 is great, because it got the regulator attention. And starting 2018, they're really coming in from many different countries, look at this space very seriously, and starting to roll out sandbox program and regulatory framework. So since then, we follow the market and the market trend, and continue to enhance our business model, trying to serve and as a bridge for how to help traditional financial industry and also many traditional investors to take advantage of this new opportunity. So we are a consulting firm, and also now also launching our own initiative to get regulated in the US and Hong Kong as well. So very glad to be here. Thank you.
Yeah, thank you, Sam. And as you can all hear from the experience of this panel, several members has been part of the industry from its very inception. So I think that's maybe a good place to start, because even you hear Sam talking about back in the day, it sounds like we have many, many years of history. It certainly feels like that sometimes, but maybe just to align a bit. So I would like to ask each of you, basically, if the whole tokenized and digitized security industry was a human being, where would it be sort of maturity wise? Is it still a baby, brand new, full of potential, but totally dependent on its adult supervision? Is it a toddler? I mean, taking the first steps, albeit a little shaky. Is it a child learning fast and see the world is full of opportunities? Is it the teenager struggling to find its place and being somewhat rebellious, or are we coming into full maturity? I doubt that any of you would consider it old just yet. But if we take the quick round, Eva, where would you place this new industry?
Okay, I would say it's really an infant stage, because from a investor perspective, we see very high, very volatile. That means, okay, it's very hard to determine the intrinsic value of the related assets. So the risks, okay, it's not easy to quantify. So that would be only, okay, suitable to very sophisticated investor. And then to most of our family office player in the ecosystem, they are interested because it seems they also present a lot of potential, but at the same time, a lot of risks as well. But not many of our traditional investment professional really an expert in this particular area. So there's still a knowledge gap, okay, in the investment industry. So the gap towards investor is much bigger. And then from a regulation perspective, you will see we cannot see very apparent rules or the approach that has been announced by the regulator, how they would, okay, regulate the player or activities. They may issue some guidelines for the time being, but still not exactly, okay, what they want to do, because they still figure out how they can do it well. So that's why they are just issuing guidelines instead of rules, right? You can see when the market is very mature, the regulators have a long list of requirements, okay, for licensing these kind of activities and regulating, setting the rules for regulating the player. But right now, they are just giving very high level perspective, how you can operate in a compliance way, but without a lot of detail. So this is why I say the road ahead is still long, but we see the pace is running fast. So I'm expecting the industry will in a very short period of time, okay, whenever some good condition present, that they will emerge into another new round. That's my perspective.
Yeah, thank you, Eva. And I think many of the topics that you brought up here will certainly be some we will return to in this conversation, especially on the regulatory side of things, as that is a topic that is high on everybody's agenda. But just to complete the round, Nitin, if you were to categorize this industry, where do you see it maturity-wise? Also an infant, as Eva says?
No, I've been in this space too long, and maybe I'm too close because I'm a technologist. I see it between child and toddler. Remember, there's a, as a dad, there's a week when you from a cool dad to an old school guy. That's where I think, where things are. So I think in many cases, the way I see it is that the industry has come to a point where it understands its potential, which is it's still learning fast, both in terms of understanding the regulatory and economic and commercial landscape. At the same time, it needs to grow up and have some element of so I would categorize as anywhere between a child and a teenager. And it's not yet been a miscreant. So until we reach to a point where it becomes a global issue, I'm going to leave it there for now.
Thanks, Nitin. And Chris, if you were to point your finger at this imaginary scale that I came up with.
I would say toddler verging on child, maybe early child. Having triplets myself that start full-time school next week. I kind of see the industry like that, asking a lot of questions, not really knowing exactly where it fits in, having to struggle to find its way. But I think with a lot of people championing it as well. So I think I see it kind of there. I felt like there was a lot of momentum last year, and some of that momentum tapered off a little bit. In favor of digital currencies being launched by some central banks, and certainly cryptocurrency hogging a lot of the oxygen in the room. So I would put it in toddler going into child, or maybe early child.
So, and finally, you, Sam, you also on this group of loving parents, seeing a child full of potential here.
Well, I have to say I'm actually a parent of 3 children, so I know about a little bit about raising children. Well, first of all, question, this is a very interesting question. I've never seen and heard anyone ask in such perspective. Is really great. And when I think about it, I would say the industry is somewhat around the toddler, right? It has the look and feel and the form, people can see it, right? And it just learn enough to trying to express themselves, to communicate with the adult, but adult doesn't fully understand what they're thinking about, right? And certainly, both the adult and the toddler themselves don't realize the potential yet, right? But both are very optimistic and confident. And definitely we need a lot of love and time and effort to nurture this toddler to make it into a fully grown adult contributing to the society, and not becoming a bad person.
That's important. Well, thank you all for playing along here, and it seems like we've come to an analogy that can be further expanded. Thank you so much. So, in order to help this maturation that I hear every one of you talk about, What do you see fueling the development currently? Is it the regulatory initiatives, or is it the industry itself? Where do you see the energy? And that's an open question for either of you, basically.
So I'll take that first stab at it, only because I think it's such an exciting time. I think with blockchain in general and Bitcoin as an entrant to this whole space, and now it's gone into 11,000 plus different digital assets. It not only attempts to sort of level the playing field in participation, both in the economic system that it creates, it's a truly global system, but it also sort of standardizes the ability for, we use the term decentralized autonomous organization quite a bit in this space, which is coined again from Ethereum context. But I think that it gives an avenue for innovation, and it gives avenue for creators to create these applications, to create these sort of decentralized autonomous organization, whether it takes the form of a smart contract or it takes form of a startup companies. So just like internet era, which had explosive growth in understanding technology and leveraging technology, I believe that this industry is sort of fueled heavily, with technology first. And then you begin to realize that many in blockchain space have suddenly become economists too, because you're dealing with token economic system, devising incentive economics. And then you have the regulatory element that follows later on. So I think, to me, and maybe it's the bias that I have being a technologist and looking at this up close and personal in terms of what technology can do, and what is inhibiting is more in terms of our mindsets and some of the regulatory sort of frameworks that are designed for a different system, different era. And that's the sort of interesting sort of nexus of where we are. I'll pause at that and see the other people's opinion.
Yeah, any comments or thoughts from Eva, Chris, on this? What is driving the industry these days?
Well, I agree with Nitin. I feel like certainly on the regulatory side, it's sort of chasing the industry. I think the industry's got really far ahead really fast, and just made a lot of headlines. And so you see some of that now, where some of the companies that were at the forefront taking a step back, looking to get their licenses or regulated as exchanges or other entities to be, I don't want to say legal participants, but certainly licensed participants in this field. So I think regulation is kind of driving from a backseat. Some of what we're seeing, I think from the front seat, in anticipation of this panel, just kind of reading about all the tokenized securities that went on just from January. I think a lot of new entrants, I think, in the space, and certainly in the investable asset space. It was quite exciting to read through some of those companies that have come on board in sort of the splash that they've made. So I see it as both, but I'm probably conflicting right now, and I think it's going to take some time to settle. And I'm wondering if because it is supposed to be kind of a globalized network in this digital space, will we have to lean more towards a globalized regulation as well? Or are we going to have these individual markets or even regional based regulations? And that's what I'll be curious to see maybe as we approach 2022 and we meet again.
Yeah, absolutely. And Eva, do you see the pull from the investors, or is it the push from the asset owners? Which of these forces are most dominating right now?
Yeah, I think to investor, particularly the institutional investor, they will see the potential of digital security or token assets. So you will see, some very large, sizable professional manager have the designated team, exploring these kind of asset and having, develop, methodology in doing the so-called valuation. That's what I have seen. And other than these, institutional investor, I still see a very big gap, which, their understanding or accurate understanding toward the industry is truly not enough, or some will see, it's kind of speculation or something new, or maybe this is just a new idea, and then maybe next year there will be another new idea. So you will see, the knowledge gap from the between a professional investor or other general investor is substantial. So if you really want to make it as a push, then I think we need to raise the equity understanding from these investor, and from the institutional side, I think it's already they have attention. It's just how they would have more buy-in so that the force or the asset deployed into token asset will grow faster in future.
And Sam, you have often a foot in each camp, speaking to both the asset owners wanting to tokenize their assets and speaking to the traditional investors. Do you see this knowledge gap, and do you see are these two parties coming closer to each other, and what is needed to further catalyze that development? And we need you to unmute.
Sorry. Yeah. Well, back to your earlier point, we mentioned like back in the days, right? It's actually look back is around the 4 years that a lot happened since 2017. Right? Although the Bitcoin launched in 2008, but basically nobody really understand and take a serious look until a later date. And even when Ethereum did actually the ICO in 2014, right? You see, like the whole ICO boom won't happen until 2017, right? So at the beginning, this is all technology driven, right? As back to Neptune mentioned in the earlier point, but it changed very fast in the past 4 years. It started from the technology driven, and then like when people make money, the news spread globally really fast, and then it turns out, Bitcoin become a risk management. Right, because for some investment manager, it's not about losing money in Bitcoin. It's about what if Bitcoin is successful? Because if Bitcoin is successful, everything else will have an impact, right? Because if Bitcoin is successful, people holding Bitcoin, the whole world to them is deflation, right? With the fiat is inflation the other way. So it moved to that stage. Smart money, they come in and they invest in Bitcoin in early days, basically from an angle that, they on a what if angle, right? What if Bitcoin success? But later, of course, closer to now, because the market is more mature, we have seen like the recent activities, a lot of large hedge funds, investment funds, even like banks and financial institutions coming in with a more proactive portfolio planning, really making digital asset as part of the portfolio, right? So now become more mature, but it's all happened within a very short period. So I think that's still lacking of a lot of educational. So we definitely need more education on all sides. Right, for the investor, for the issuer, for the regulator, and people have to probably explore themselves because all these are too new to have a textbook. Right? Anything exists in the textbook probably already outdated. So I think education definitely it will be a very important driver to fuel the industry to continue to move forward.
Yeah. Thanks. Nitin and Chris, yeah, sure. Go ahead, Chris.
I was going to ask Sam and Ava a question. I'm really curious about the general population on their acceptance of digital assets. Is it like an older generation, younger generation that's more accepting of onboarding those assets into their portfolio? Maybe excluding cryptocurrency, but focusing on really tokenized securities.
Yeah. Let me answer your question. I think from our observation, it's now only the next gen, really have real interest. The older generation, or what we call patriot, they are very much focused on what they can generate money in the past. So this kind of new idea, new concept to them, they need to have a very difficult process to understand first. So this is why it attracted attention from the newer generation. And then for those who have their own trading team. I see many of the next gen have in-house, okay, one trader or they actually find other external party setting so-called portfolio, okay, is doing all this kind of different coin trading, but not much on what you mentioned about a token asset other than the coin trading right now. So I think you need to let them know, but at the same time for the family business or not a substantial one, all entrepreneurial need for capital. So they are always interested to understand how tokenization can be a viable way for them to get funding. So that would be a source of potential party that will be involved in this particular sector. And once when these kind of tokenized assets are well received in the markets, not just the party want to waste capital, but when these tokenized assets can get so-called acceptance by other investor, then they will have chance to have more healthy development on the pricing. Otherwise it's kind of what they call it's kind of gambling. So that's my observation right now. It's still very focused on the coin trading rather than really investing much on tokenized asset.
Great,
thank you, Eva. Just returning to this knowledge gap, and a question for you, Nitin and Chris. You both represent companies that have played and plays significant roles in the quote-unquote established financial services sector. Looking back, you have been, or your companies have been through the .com era, where there was an us and them, all of these .com companies. Now every company who can get the .com, everybody's a dot something at least. Then we had the fintech, the first fintech wave, which again led to an us and them notion, and now every company working with any type of financial services call themselves a fintech, even though they have been around for 30 or 40 years. Right now, I still see an us and them when it comes to digital assets. How do you see in your organizations, in the big organizations like IBM and Morningstar, how do these organizations embrace these new developments? Do they understand them? Are you the one-man army spearheading this into the organization, or do you see them being receptive? Basically, what do you see from the inside?
Yeah, I'll start with Morningstar. I think it's interesting. Morningstar has been around for probably 37 years or so, but I don't think it's been quick to embrace the new technologies as a company philosophy. I think there's people who understand it, and even the people who were involved in rating the Fat Brands token didn't fully understand what they were rating. They were rating a paper asset that was then digitized. And that's the one thing that I noticed with Morningstar, because it is, the whole philosophy of the company is geared towards the advice industry, and that you get better returns with professional advice. And so that lends itself to kind of an old style of investing, less self-directed investing, and kind of that personal hands-on relationship. And so internally, there are some drivers to move us forward. I think it's starting quite well with some of what we're seeing in the marketplace, launching of ETFs and some funds that are based solely on digital assets. And that's our bread and butter. So I think that's the way we're going to enter this space probably, I would say later this year, early next year. But you're right. The way you led the question on was great, because actually I see that in the company that is still very driven by the, I would say, legacy investment style, investment philosophy, with not a lot of uptake yet of the new style. So I won't say I'm a one-man army, but it's certainly a very small army, and it's making very slow progress.
And I have a different perspective on this, Christian. So as you know, IBM, we built we built the existing financial infrastructure in the sense that, all the payment systems and all the exchanges, they're using some element of our technology, and that has evolved exponentially over time. So when I founded the Blockchain Labs in 2013, 2014 timeframe, a larger part, we did like 1,200 POCs. So that was a lot in that era as an effort to understand the industry and help our client understand the transformation element of the industry. And then I realized that we were doing all these POCs, but they never led to any real outcome in terms of adoption of technology and really using it. While the wild west world of crypto was really exponentially moving up, at a much faster pace. We saw the ICO boom, we saw the STO booms. And then I found the Digital Asset Lab with the intention of the fact that you simply cannot use technology if you don't have the notion of something of value in it, and build sort of what we call as private permission networks, and take that technology to the next level. So we build payment networks. We begin to then talk to central banks on central bank digital currencies. Again, preserving the role of, building that infrastructure that we've already, always built historically. It is also, I would agree with Chris, it's still a small army from enterprise perspective. And today my biggest challenge is talent, because all the talent is gravitating towards the disruptive element of the crypto space, because I think it's attractive, it's young, it's growing, and so you see a lot of growth potential. And so that fight for talent is, I think, every large enterprise's challenge to keep up with that whole thing. And that also represents the demographic that industry attracts. So all millennials and all Gen Zs are going towards that, and that's because they understand it better than to traditional financial institutions. So there's this tug of war, but there's also an understanding of the two momentums, I would say. So I'll pause at that, get your thoughts.
Yeah. Thank you. It's great to get that kind of insights from the established players as well. I would imagine that, and I think Eva brought it up early on, that one of the major issues is still the regulatory uncertainty. You basically all mentioned that regulators are coming to the table now. They're starting to regulate, but they're still sort of behind the development rather than in front of the development. So it's a quick question to you, Sam. When you advise a potential STO, I assume that one of the things you tell them about the possibilities of an STO is the global market that you enter into, but at the same time you would basically need global compliance and understanding of global regulation. How do you see the STOs that you advise deal with this regulatory uncertainty?
Right. Yeah, that's a wonderful question. First of all, I definitely agree that the real potential of STO or digital assets or digitized securities rely on the global liquidity, right? If we talk about just local financial markets, even the existing stock market is very efficient, right? You look at like Hong Kong stock market, New York stock market, London stock market, but they are regional markets, right? So the interesting element of digital asset is global trading and global liquidity, because technically, a lot of those, almost all of those digital assets or digital securities are issued based on a DLT infrastructure on the blockchain, right? So which the security will be doing settlement globally on the blockchain, right? Not with any local stock market or clearing house. So that gives a global trading infrastructure already, right? But the other aspect, of course, because this is also in the area of security and regulated area, so it is inevitable to also follow the compliances. So I would see probably we need a hybrid model, right? It is not something like DeFi, like completely disrupt and try to get around all the regulation. But on the other hand, we need something that is comply with the local regulation, but also be able to allow a global operation, right? This is totally doable, right? For example, like we just finished a paper on this topic as well, right? So you think about it, for example, now most of this digital securities STO is considered as complex financial products in many markets. So almost like a derivative, right? That's how regulators see it. Right? And in fact, it is, right? If you think about tokenizing real estate and tokenizing stock and debt, those are the underlying asset, and the STO is just an additional layer on top, just operate like a derivative, right? So in that aspect, they mostly restricted to the professional investor, right, or qualified investors. Even for that, the definition of qualified investor or professional investor, or even the terms itself, is different from country to countries, right? So for example, in Hong Kong, we call professional investor, in US, accredited investor, in Australia, qualified investor, and all these kind of terms. And of course, also the requirements of the qualification is different, right? If you think about it, it seems very complicated, but we can actually take care of all that local customization with a smart contract, right? If you think about it, a smart contract can take care of all that. You know, when we do the KYC, when we track where the investors are coming from, the IP address, we can already give them that set of requirements for the local market, right? And also, I see in the ecosystem, we probably have to work with the local brokerage house when we're doing investor onboarding in a particular region, right? But if we do that on a global scale and bring it to a network, it will become a global distribution network and be able to operate globally, right? For the secondary trading, it's much easier, right? Because like the settlement is done on the blockchain. If you think about it, when we talk about STO exchange now, they unlike the traditional stock exchange, which doing the clearing and settlement, the STO exchange, literally they're just doing the order matching, right? Customer acquisition, marketing, order matching. The settlement is done on the blockchain globally.
Yeah.
So I think there's definitely a huge opportunity for global operation for digital assets.
Yeah, and Nitin, from an IBM perspective, you also, as you mentioned, of course, serve most of the established financial industry, and that is also becoming increasingly globalized. And as from personal experience, I know that many of the banks, they turn to their technology providers for maybe not directly RegTech, but at least compliance and regulatory help to be sure they are compliant in a global environment. How do you service them?
No, I think that's a brilliant question. I'll tell you this, that we acquired a company about 4 or 5 years back called Promontory. Promontory is all ex-regulators around the world, and they form this advisory sort of entity, which is building frameworks. So we spent about 14 months in building a digital asset regulatory framework. And the reason why we did that is because it's not just about using raw tech. We've used, again, one thing that's been very rampant is the notion of custody, both in terms of custody banks and all the derivatives that you're talking about, Sam, stems from the ability to keep the assets safe. But the notion of keeping the traditional sense of custody, which is dematerialized assets, your mortgage-backed securities and other aspects of securities, which is tied to your CSDs behind the scenes, the notion of keeping a digital asset safe is completely different, because you're not actually keeping an asset safe. You're keeping the claim to the asset safe. The asset resides in the blockchain network. So part of our work is giving our clients, and this is again 14 to 18 months of work, pretty comprehensive examination criteria, and we're also working with the regulators like OCC and FinCEN and many global regulators like FCA, and including what we've done with in Hong Kong and Singapore, is helping them understand is how do regulators view this industry and what is the examination criteria they need to do for investor protection, for systemic resiliency. And that work has been rewarding because and surprisingly, many regulators in the world are very receptive to it. They're not objective to it. They're trying to understand this whole space. And our job is bridging that gap, both from information technology and education gap, as you rightly pointed out. That has been sort of the rampant work that I have been personally engaged in the past, I would say 2 years. And that's accelerating at a much faster pace than we anticipated.
Yeah. And Chris, from an asset analyst's perspective, I assume that whenever a Morningstar analyst look at a given asset, it's looked into the context of the area in which this product is sold. But now, again, on a globalized scale, Does that bring additional challenges to you as analysts when you need to put a digital asset into a global perspective and assess it?
So yes and no. I mean, so we have a global analyst team certainly for equity markets. So if we were to go into that space on the analyst side, it would not be an issue. So we would have local understanding in various markets around the world that would understand the context of that asset and how it's fitting into that framework. On the debt side, the analysts only reside in Europe and North America. So we probably would have, in fact, we don't rate any debt securities outside of North America or Europe. So that would be an issue for us, I think, in that respect, to be able to rate that sort of instrument in the context of digital or not digital. I think the one thing that I did realize from when we were analyzing the one that we did rate in North America, the FAT brands, is that we did give it some credence because it was a digital asset. So that gave it some bonus points, for lack of a better word. And that's something I think that would be taken more into consideration. I mean, that was almost 2 years ago. If you look at the market now, there's been so many changes in development in that market. I think a lot more of that would have to be taken into consideration. What network is it going to be? What blockchain will it be trading on? What technology will be behind it? Is it solely a digital asset? Is it like literally just a subscription key, or is it a paper instrument? And when I think about investor education, that's the one thing that I always think about: is someone going to be comfortable, with their portfolio being entirely digitized? And I can't get my mind across it yet. I mean, I would be, but I think in terms of mass audience, I don't know. And that's where I think Morningstar could add a lot of credibility if we were to enter the space full-heartedly, maybe through a separate division.
Yeah, so one thing else to know about this piece, right, Christian, is this. This is my challenge too, so the globe, and I think Sam pointed this out earlier, these are all global networks. So what traditionally would have gone through 6 intermediaries, because now you have investment banks and you have correspondent banking relationship for payments, and then you have the local regulators that look into an asset class and approve, and ADRs. These are all representation which has fragmented the entire industry. Suddenly now you have an asset class that resides on this blockchain network. You could transfer it in literally seconds, if not minutes. And it's a truly global network, all right? And so at that point, an asset class, whether it's a tokenized fiat or a tokenized security, is able to move without any of the 6, 7 intermediaries that are involved. So how do regulators at the endpoints deal with that asset transfer? So if I'm moving a transfer from, let's say, United States or Philippines, well, the transfer actually happens. So how do the regulators at the endpoints treat that asset? Because suddenly now all the intermediaries that were meant to be regulated and provide the cushioning of that regulatory clarity that was there is suddenly gone, good and bad, all right? And that is something which is very hard for many of the global companies to fully understand, that, okay, I no longer need to have a corresponding banking relationship or an established relationship for me to move an asset. And that becomes a massive challenge for us to get our arms around if we are applying the same rules and regulation lens to a new emerging industry, I think.
Well, I think that's a very good point. Because in the traditional system, when you mention about all this intermediate, a lot of them actually exist just to mitigate the counterparty risk.
That's right.
Look, right? I mean, who is dealing with who and who will do what and when and all that. And all of a sudden, because of the blockchain and all this on-chain business model, the counterparty risk is being managed, right? Because like we are now talking about atomic swap, swapping the asset and the currency at the same time, right? And people don't even have to know who's the other party they're transacting with, right? So this is the new paradigm, right? And even like when we look at the definition of securities, is somewhat being challenged, right? As many people follow the Howey test, I'm sure all of you familiar with, used by the SEC as well. There are 4 elements, right? Is it an investment of money? Is it involve a common enterprise, right? Does it make profit based on third-party effort? And does it have making a profit, right? So the 2 of them is being challenged, particularly, is there a common enterprise involved? And is there a third-party promoter? the reason a lot of the DeFi business model is not considered securities because they are literally just a smart contract. It's not even a common enterprise. And there's no third-party promoter in the middle as an issue, right? So this is a really new paradigm. I think educators also need to look at it from a different perspective. And of course, like from the investor, a lot to digest as well. Yeah.
And speaking of a lot to digest, I only managed to get through half of the questions I would have loved to ask at this wonderful panel, and we could surely go on for another hour. But since we are literally at the top of the hour, I think we unfortunately have to wrap up. I would very much like to thank each and every one of you for really sharing and wonderful insights, great expertise, and I, for one, look forward to continuing the dialogue, hopefully whenever and wherever we can start meeting again. Also, in as much as we love real-world assets, we also love being in the real world. So I hope we will see each other at some point, and if not before, we will definitely see each other at the TADS Awards. So with that, I'll hand it back to you, Sam, for any final comments, and wish you all a great day.
Okay, thank you, Christian, and thank you, everyone, for your participation. Really appreciate for your time on a Friday evening and Friday morning. So have a wonderful weekend. Thank you.
Thank you.
Yeah,
Same to you.
So we will make this recording. So our team will edit it, just to make everything smooth, and then we will make it available online as a video archive. For it's a long tail content. So really appreciate for your inputs and participation today.
Absolutely. Thanks, guys.
All right. Thank you, Lentine. Yeah. Thank you, Chris. Thank you, Eva.
Thank you, everyone.
Thank you.
Have a good
Thank you,
evening.
Christian. Thank you, Camille. Have a good evening. Bye-bye.
Bye.